Welcome to OptionsPlay. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and I'm really excited today here to launch the new credit spread opportunity report for OptionsPlay members. Today, what I'm going to do is spend a few minutes to walk you through the report, make sure that you understand how it works, where to access it, and lastly, best practices for trading credit spreads. So let's go ahead and get started. Now, we created this report because we've been getting a lot of questions from members asking us, what are the best practices for selling credit spreads? How do you find the best opportunities here in the market? So we created this report to allow you to quickly understand where you can find the best opportunities using credit spreads for those of you that like to trade this option strategy. Now, first of all, to launch this report, this is now available to all members within your OptionsPlay platform. There's a new link at the bottom of your platform called Credit Spreads. You can click on that link to launch this new report. Now, again, we created this report because investors were asking us, how do you find the best opportunities using this very popular trading strategy? And you can't just necessarily find credit spreads on every stock that you wanted to trade. So we created the new credit spread opportunity report to number one, we scanned for only the most liquid optionable symbols as the universe of stocks. So out of the 4,200 names, you only have about 200 to 300 names each day that is very liquid. We're only looking at this list so that when we're finding opportunities, we know that we can usually get filled at the midpoint for any of these strategies that we're selecting. And we're only selecting credit spreads where you can collect at least 1/3 of the vertical's width. And this is all designed to reduce the risk of the overall trade and maximize the income that you actually receive. And lastly, every single credit spread on this report lines up with the directional view that we have using technical indicators. These are back-tested strategies from a technical perspective that provide not only a directional edge, but also a probability-based edge from the credit spread. And then line that up with the fact that these are all very liquid, means that you can easily execute these strategies in your trading account. Now, to walk you through the report is broken up into 5 separate sections. On the left-hand side, it's pretty straightforward. You have your symbol and your direction. This tells you which stock we're interested in, either a stock or ETF, and what directional view we have on that stock. And the credit spread details shows you exactly which expiration and which strike price we're buying and selling. So bullish credit spreads are going to be put credit spreads, bearish credit spreads are going to be call credit spreads. And as I said, because the main purpose of these credit spread reports is to make sure that we're reducing risk as much as possible, we've actually sorted this report based on the risk to reward. So we actually show you the premium that you're actually collecting as a percentage of the width, which is the total premium that you're playing with. So the higher income that you're receiving, the lower the amount of risk. So this report is sorted for you where the highest or the best risk to reward are on the top of the report. And as you go down the list, the risk to reward gets worse and worse. Now, these reports still, at the very least, collect at least 1/3 of the width. So we're never taking on excessive amounts of risk whenever you're looking at any opportunities here in this report, but always the ones at the top of the list are the ones that have the best opportunities. And lastly, most investors that sell credit spreads like to know a few different indicators such as volatility and earnings. So it's important that you know what the volatility is with the IV rank and also when the next earnings report is using the next earnings date. And we have the earnings date, whether it's an AM or PM earnings date, and whether and how many days to expiration. And lastly, this report that we publish is updated every single hour throughout the trading session. So from 9:30 a.m. to a little after 4 p.m., we are going to update this report every single hour. They usually update around 15 on the hour. So 10:15, 11:15, 12:15, so on. And the last update is at 4:15 after the close. So for those of you that are familiar with credit spreads, we generally have a few best practices. So I have a quick summary of how to utilize this report. Generally speaking, with any of these strategies, once you enter them, we have 3 potential triggers to exit the trade. Whichever one of these 3 triggers first, that is your signal to exit. So whenever you sell a credit spread, you either exit at 21 days to expiration, either a 50% gain of the max loss or a 100% loss of the max gain. So whichever one of these three triggers first, that's when you exit. So in this example, if let's say I sell a $5 wide credit spread, and let's say I collect $2 for that credit spread. So a $5 wide credit spread that I'm collecting $2 on, that means my max profit is $2 and my max risk on this is $3. What I want to do is to set a stop loss, a take profit, and a exit if I get to 21 days to expiration without triggering either the max loss or either the stop loss or the take profit. So if I collect something for $2, I want to exit this trade at a profit if this $2 credit spread now trades for just $1. So if I trade a $2 credit spread that's now only at $1, I've made a $1 profit. That's time to take profits and cut and get out of the trade. If I sold this $2 wide credit, a $2 credit spread, and now that credit spread is now trading at $4, so if now I have a $2 loss, it's time to cut your losses and move on. Now, if the trade gets to 21 days to expiration without triggering either one of the stop loss or the take profit, then you also want to close out the trade wherever the trade actually, no matter whether it's at a gain or a loss, you generally want to close it out at 21 days to expiration. And for those of you that are still in the process of learning about credit spreads, or you simply want a refresher on this strategy, I highly recommend you to watch my webinar that I recently hosted on this type of strategy. It breaks down exactly how the strategy works, what are general best practices, and make sure you brush up on these types of strategies before you execute them in your portfolio. You can find that video at trade.optionsplay.com/credit spreads. Trade.optionsplay.com/credit spreads. With that, I want to thank everyone for taking the time out here today. Again, we're very excited to launch this report to help you better understand how to find opportunities using credit spreads. And if you have any questions, feel free to reach out to us at info@optionsplay.com. We know you have a lot of options when it comes to choosing your options research, so we're really appreciative of you supporting us here at OptionsPlay. We encourage you to continue sending us feedback and letting us know what you think about this credit spread report and what you would like for us to build in the future. Thank you so much and have a great day.